Welcome to Trade Foundation. In this video, we're going to explore the basics of Forex trading in a simple and easy way. Whether you're a complete beginner or just curious, this video will give you a strong starting point. Let's begin. What is Forex? Forex stands for foreign exchange. It is the global market where currencies are bought and sold. Every day, people around the world exchange currencies for travel, for business, or for investing. The Forex market is the largest and most liquid financial market in the world, with over $6 trillion traded daily. How does Forex trading work? In Forex trading, you always trade currency pairs. For example, EUR, USD is a currency pair that shows the value of the euro against the US dollar. If you think the euro will get stronger than the dollar, you would buy the pair. If you think the euro will get weaker, you would sell it. Major currency pairs, the most commonly traded currencies, are called the majors. They include the US dollar USD, the euro or the British pound GBP, the Japanese yen JPY, the Swiss franc CHF, the Australian dollar AUD, and the Canadian dollar CAD. Most beginners start by focusing on these major pairs because they are more stable and have lower trading costs. Why people trade Forex? People trade Forex for many reasons. To make a profit from price movements, to hedge against currency risks, or to diversify their investment portfolio. Forex trading can offer opportunities almost 24 hours a day, 5 days a week. What moves the Forex market? The value of a currency can change for many reasons, including economic news like inflation reports or employment data, interest rate changes set by central banks, political events and elections, global crises, and natural disasters. Understanding these factors helps traders make better decisions. Basic terms you should know. Here are some key terms every beginner should learn. Pip, the smallest price move that a currency pair can make. Lot, the amount or size of a trade. Leverage, borrowing money to control a larger trade size with a smaller deposit. Spread, the difference between the buying and selling price. Risk warning, Forex trading carries a risk of loss. It's important to manage your risk wisely, never trade money you cannot afford to lose, and always continue learning. Start with small amounts and practice on demo accounts if you're new. Thanks for watching this beginner's guide to Forex trading. If you found this video helpful, don't forget to like, subscribe, and turn on the notification bell for more simple trading lessons. This content is for educational purposes only and not financial advice. See you in the next video.